Hey everyone, welcome back to Sam Trading Strategies. In today's video, I'm going to show you a powerful yet beginner-friendly strategy that combines the triple moving average, TMA, with the stochastic oscillator, a turbo setup designed for fast and accurate entries in binary trading. This setup helps you catch trends early and avoid false signals. We'll be using a 30-second candle chart with a 3-minute expiry time, perfect for short-term traders who love quick momentum moves. You'll learn exactly when to buy, when to sell, and how to confirm signals using the TMA and stochastic cross. I'll also share pro tips to use this only in trending markets so you can avoid sideways traps. Make sure to watch till the end, because I'll reveal the exact indicator settings. Fine-tuning them is the key to making this strategy perform its best. So stay tuned, and don't forget to like, subscribe, and tap the bell icon to get more tested and verified strategies every week. Disclaimer: this video is for educational and informational purposes only. Trading involves risk and can result in loss of capital. Always practice on a demo account first and only trade with money you can afford to lose. I am not providing financial or investment advice. All right, traders, let's understand the concept first. This strategy uses two simple but powerful tools: the triple moving average, TMA, and the stochastic oscillator. The TMA helps identify the main trend direction. When the price is above the TMA line, the trend is up. We look for buy setups. When the price is below the TMA line, the trend is down. We look for sell setups. The stochastic oscillator works as our confirmation trigger. It shows when the market is temporarily overbought or oversold, helping us catch the next move right when momentum shifts. Buy setup: price must stay above the TMA line. Stochastic drops below or touches 20, then crosses upward. That's your signal to enter a buy trade. Sell setup: price must stay below the TMA line. Stochastic rises above or touches 80, then crosses downward. That's your signal for a sell trade. Remember, this strategy works best in trending markets. Avoid sideways conditions because both indicators may give mixed signals. Use the 30-second candle time frame and 3-minute expiry for quick, clean confirmations. And to make things easier, I've created a free strategy checklist PDF. Download it from my Telegram link in the description and keep it open while you trade. Now that you know the rules, let's go deeper into the charts and spot these setups in live trading. Let's jump straight into the chart. All right, traders, let's look at this live example of a sell setup using our TMA and stochastic turbo strategy. You can see the TMA line is clearly sloping downward, confirming a strong downtrend. That means we'll only focus on sell trades that follow this direction. After a small pullback, the price moves up near the TMA line, but still remains below it. At the same time, look at the stochastic oscillator. It rises above the 80 level, showing that the market is temporarily overbought. Now watch closely. The stochastic lines cross downward from above 80. That's our confirmation signal to enter a sell trade. Right after the entry, the next few candles turn red and the price starts dropping smoothly. This trade moved perfectly in the direction of the trend, giving us a clear winning result. That's the power of combining the triple moving average with the stochastic oscillator. It helps you catch early momentum shifts while staying aligned with the trend. All right, traders, here I've entered a sell trade using our TMA and stochastic turbo strategy. You can see the TMA line curving downward, confirming that the market is in a downtrend. Right before entry, the price moved up close to the TMA line but couldn't break above it. At the same time, the stochastic oscillator touched the overbought zone, near 80, and started crossing downward. That crossover is our confirmation signal. Price below TMA plus stochastic cross down equals perfect sell setup. So I took the entry here, following the trend direction. As soon as the trade started, you can see the market forming a few small pullback candles, but the TMA line still holds the bearish slope. The stochastic lines keep moving downward, showing that selling pressure is building. Patience is key here. Even if one or two candles move sideways, the trend confirmation from TMA and stochastic is still strong. This stage is where beginners often panic. But remember, as long as price stays below TMA and stochastic remains under 80, your setup is valid. We simply wait for momentum to continue in our favor. And here's the final result. The market continues dropping smoothly, and our sell trade finishes in profit. The stochastic lines stay below 50, confirming that the downtrend is strong till the expiry. Now let's look at a live example of a buy setup using the TMA and Stochastic Turbo strategy. At this point, the TMA line is curving upward, showing that the overall market direction is bullish. A few candles earlier, the price moved below the TMA line and then bounced back upward, giving us an early sign of strength. Down at the bottom, the Stochastic Oscillator dipped below the 20 level, indicating that the market is oversold. Then, we see the stochastic lines crossing upward, which becomes our confirmation signal to enter a buy trade. So, I took the entry right at that crossover, following the direction of the rising TMA. After entering the trade, we can see a few small candles forming sideways. This is completely normal. The TMA line still maintains an upward curve, confirming that the trend is intact. Meanwhile, the stochastic lines continue to rise above 20, showing that the buying momentum is gradually increasing. This stage teaches one of the most important lessons: patience. Everything still looks strong, so we simply hold and let the setup play out. And here's the final outcome. The price continues moving higher, closing the trade in profit. The TMA line stays upward, and the stochastic lines remain above 50, confirming that buyers are still in control. This was a clean winning trade. It followed every rule of the TMA and Stochastic Turbo strategy. All right, traders, before we wrap up this video, let's quickly go over the indicator settings so you can set them exactly the same on your chart. First, for the triple moving average, set the period to 21 and choose TMA from the moving average type menu. This helps the line respond faster to price movement compared to normal averages, so you'll get quicker confirmation of trend direction. Once done, click Save, and your TMA line is ready. Next, for the Stochastic Oscillator, use the setting 6-3-3. That means the %K period is 6, %D period is 3, and the smoothing period is also 3-3. Keep the moving average type as SMA. These values make the stochastic highly sensitive, perfect for catching early reversals during fast-moving sessions. With both indicators tuned like this, your TMA plus Stochastic Turbo strategy will work smoothly on a 30-second candle chart with a 3-minute expiry, just like we used in today's live examples. And that's it, traders. Now you know how to set it up, identify entries, and trade with confidence. If you found this strategy helpful, don't forget to like, share, and subscribe to the channel for more verified and tested setups. You can also download the free PDF checklist from the Telegram link in the description. It'll help you remember all the steps while practicing. Thank you for watching, and I'll see you in the next video with another powerful trading strategy. Till then, stay disciplined, stay consistent, and trade smart.